Hey, my name is Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about the Federal Reserve. They've had their interest rate meeting this week and they've held rates. So we want to talk about what impact does that have on the Bank of England, because we're in the UK. Is it going to impact mortgage rates in the UK? Is it something we need to worry about? Well, we've got all the details in this video. Now, if you're new around here and you haven't done already, please do subscribe to the channel over there and hit the bell notification. We've got new property content on house prices, on interest rates, on investing in property every single day. And make sure we get some more views on this video. How do we do that? Simple. Smash like, tickle like, do something to the like button. That massively helps with the YouTube algorithm and helps the channel grow. So thanks to everyone that does that. So, what's going on? Well, Jerome Powell and the Federal Reserve had their meeting this week. And it's an interesting thing that's happening at the moment because the American economy did shrink in the first quarter. Now, that was uncertain if that would happen or not. I think a lot of economists were unsure how quickly these tariffs would have an impact, but they already did have some sort of impact on the American economy. Now, two things that the Fed has to focus on. One is employment, and the second, more importantly for them, is inflation. And so that gives them a problem at the moment because right now there's a lot of uncertainty around inflation. So the Federal Reserve has their rate and they kept it at 4.25. Now, they actually have a range. It's 4.5 to 4.25, but 4.25 is really what we've got to look at here. Now, that is where the Bank of England currently sits. So this week, the Bank of England cut rates. If you want to know more about that and what the vote was and the impact and where we're likely to be going with interest rates in the UK, click on the Property Accelerator logo, click on videos, and you can see yesterday's video on that one. So the Federal Reserve sits at 4.25% right now. And the expectations are that they could hold rates even in the next meeting as well. And right now, the American economy has contracted. So the economy contracted by 0.3% in that first quarter. And that did catch a few people off guard because a lot of the tariff stuff is happening, but that's bringing problems down the line, which we're going to talk about here as well. Now, unemployment in America is still fairly low and the jobs market is still quite high. So America, at the moment, they have the Department of Government Efficiency called DOGE, which is headed up by Elon Musk. And that is cutting a lot of American government jobs at the moment. But so far, that hasn't filtered into the jobs data that we've seen. And so you've seen a lot of cuts, and that will impact small local businesses as well, because let's just say you have a restaurant near a government building and that government building gets shut down because everyone's been laid off. Of course, your business is going to struggle. That means a local garage that does repairs on those people as cars might struggle as well. Just because you lose jobs in one area, it impacts other people's businesses and jobs as well. So I think going forward, the jobs data is progressively going to get weaker in America as they've got all these problems. Now, the uncertainty is the big thing that Jerome Powell was talking about. So right now he's saying, look, we don't really know how these tariffs are going to pan out. Maybe they could turn out great and all manufacturing comes back to America as Donald Trump wants, but that's not looking very likely. You see, a lot of companies are making false promises to the Americans or to Trump in order to get themselves some protection and maybe get a tariff reduction. So Apple has promised to spend $500 billion on manufacturing in America, but we know for sure they're not going to build factories and build iPhones in America. That's just not going to happen. But what they did get is the president's ear, and now they have got tariff exemptions on some of their products through China. So that's something that is happening a lot at the moment. Lots of companies are promising Donald Trump that they'll bring manufacturing back, But a lot of them, because factories take years and years and years to build and planning permission, staffing, building that's going to take a long time. And probably a lot of these companies are expecting that the next administration will roll this stuff back. And so they'll just keep their factories where they are in China or somewhere in the Far East. So uncertainty was talked about a lot by Jerome Powell. Higher inflation is his concern at the moment. So right now, ships bringing cargo to America, there's 30% less ships. And that's starting to happen this week. So although this tariff war has been going on for a couple of months now, the ships had already set sail previously. But now you're seeing the real data on what impact is happening from orders from Walmart, from orders from big business. And cargo imports into the UK this week are down 30%. Now that's going to lead to stock shortages and potentially higher prices in the market. So higher inflation is the thing that Jerome Powell is most focused on at the moment, and just seeing how these tariffs play out. And he was saying that again and again and again. We just don't know what's going to happen. We need to see what the impact is going to be on the US economy. But the expectations are that inflation is going to go up, unemployment is going to go up, and businesses are going to shut because of this. And that is the worry. Now, hinting and implying on rate cuts going forward, it doesn't look like the Federal Reserve will cut at all in June as well. And that is a worry, because the UK, the Bank of England, we like to follow the Fed. And so right now we're both at exactly the same. So we could cut by 0.25% and it wouldn't impact massively, because we would still be fairly close to what the Federal Reserve are. But it's better for UK interest rates if Jerome Powell had decided to cut rates and cut them fast. The expectation is that the Federal Reserve is going to act too late because they don't have the confidence to predict what's going to happen. And so because of that, they're going to let all of this stuff play out. There's a massive lag in the data that they get, and the damage could already be done by the time they cut. Now, when that does happen, the cuts, they could come faster. And that could be good, because that potentially means the Bank of England will have more opportunity to cut rates at a faster speed as well. Remember, most of the other central banks have already got their rates close to 2%. The EU's there, Canada's there, Switzerland's there. We're lagging behind because we're staying with the Federal Reserve. Now, can rates come down at a rapid pace? Because they went up fairly slowly. Yes, they can. If you look at what happened in 2008, someone mentioned in the comments yesterday when I was replying to them that they forgot how quickly this happened. In October of 2008, so in October 2008, rates were 4.5%, exactly, or actually higher than what they are right now. So we've obviously had our cut. Now, by March of 2009, rates had gone to 0.5%, 0.5% in just 6 months. There wasn't even 6 meetings in that time, because you get the meeting every 5 to 6 weeks. So the pace of rate cuts can speed up significantly if there is some sort of global crisis. And what we're watching right now, what we need to happen right now, is a deal to get done with China, for Trump and China to figure out what they're going to do and to rapidly and really bring those tariffs down to something like 10%, so businesses can open up and start trading again. Does that happen? I don't know. Last time they had a trade war when Trump was in, it took years, a couple of years for this to get resolved. That would be really, really bad for American business. Anyway, what do you think about the Federal Reserve? Do you think that we can uncouple our rates from the Federal Reserve so they could keep them at 4.25 and we could go down to 2%? Do you think that's possible or likely? Do comment below. Where do you think they're going to go? Do you think they're going to cut rates? Have your comment and opinion below. Do also smash the like button, share the video, and also check out all the other content as well on the channel, including this video right here.